Hello everybody. So I've had a few questions on entries and exits, just asking me to expand a little bit on how I do it. So what I'm going to do in this video is show you a couple of entries and exits and how I plan them. Okay. So what we're looking at here is the South African Aussie, the South African top 40. I have put 3 levels in. Okay. And let's just make sure that we're all on the same page. There's the first level, which was a previous swing low. Okay. There is a next level, which is that pin bar, and you can see price turned on it. And then I have another level, which is basically that Brooks gap. So this tail on this bar here is the other level. Okay. Then obviously you can see there is another level here, which is the 200 EMA. Okay, so what I'm going to do is just drill down to the hour and let's work from this area here. Okay, so let's just delete that. Just so you know what we're doing, we're working from here and we're going to work out some trades going this way. Okay, so first things first, I'm going to put in a 1 hour level right over there. And by the looks of things, this is a pretty important level. You can see how many tails are touching it. Okay, so when you see that kind of price action where you've got all these tails touching a level, you can immediately take a short. Now, you could take it at the level, or you could say, well, I want it to break below here. So the difference between the two is as follows. So I want to be above the next level. Okay, so there is the high, but there's the next high. Okay, which basically means I need to be above this orange line for my stop. So if I go in at a break of this little range it forms, then I have a 400-point stop loss. Okay, the other way that you can do it is to say, well, I mean, we're on the hour here, so that's the first hour. I've had 2 hours of tails here. So what I'm going to do is I'm going to look for the top of this bar here, that's just slightly below, just to allow for your spread. Okay, so there it is, and you now have a 230-point stop loss. Okay, so now that's my entry. Now the question you need to ask yourself is, where are we going? So at this point we had a gap down. Okay, now with the gap down there are a few targets, and that is the first target right there. So this here is the first target. Why do I say that? You need to watch my my gaps and Brooks gaps video. I explain it in detail there. But basically, this is the first magnet for price to get to. And you can see how it got here. And then we struggled a bit. And then we eventually broke through, came back, tested the break, and then continued. So that's the first target. So there's many ways of doing this. You could say, from there, I have a 236 pip stop loss. So I'm quite happy to take profit at 400. That's a 2-to-1 trade. Okay. Or alternatively, you could keep a stop loss like that and wait for this first swing high, which doesn't really come here, which is also dangerous. So your next target is going to be the gap close, which is a 640 pip target. Okay. So let's just delete that. So let's put another one in here. So here's the next target right here. Okay, and now you can see how this bar hit it, went past, came back, and the buyer stepped in here. Then you have a Brooks gap, which is over here. Okay, I'll just leave that in green. And that's essentially where price turned eventually. Okay, so how I typically do it is if I'm not by my station and I'm running around or doing something else, what I'll do is I'll take the trade here. So I'll have a 230 pip stop loss, and I will take the most logical target, which will be the gap close. And I'll take profit at this point. Okay. I mean, there's nothing wrong with banking 600 points. Okay. Now, some people will leave trailers and all that kind of stuff, but you know, I'm not going to be sitting in front of the computer all the time. So for me, get in, take profit, look for the next trade. And this happens at 1 o'clock in the afternoon. So, you know, it was a nice trade. End of the day, leave it. The next day comes around, which is here. And you know when opens, you have a gap. Now, the first thing you need to do is look on your hour, where are the targets? So the first target is obviously this tail, okay? But this Brooks gap is close, so that is the most logical target. So that's the first one, and the second one is here. So now again, let's assume that we have a trade in here, and we create a standard 150 point stop loss. Oh, let's just make it let's just say it's a 200 point stop loss, okay? It doesn't quite get below these tails. Ideally, you'd like to be below there, okay? From a safety perspective, more than anything else. So if I delete this, and we say the following. We say we want an entry there, but I want a stop loss, not on this pin bar here. I want to be about 10, 20 points below that. Okay, so now my stop is 330 points, so you need to calculate your risk based on that stop loss. Once this trade starts moving, obviously I always move my stop up. You want to mitigate your risk, so you want to reduce your risk as much as possible. Now, the overall trend of this was up. You can see how we had this massive move up, and we're still moving up. So anything short needs to be watched very carefully, because that is normally a scalp. Okay, so this is a long entry. Let's move this. But now, because we're with trend, I can leave it a bit longer. So the minute it starts running, I can move my stop up. So what I'll do is I'll move my stop up to there and wait for the first pullback. First pullback happens here, which is the next day basically. Okay. So now you can see we are still above a cloud. We now have something very interesting that happens. Okay. We have a bullish crossover above the cloud with Tekinson and Kijinson. So that is an indication for me that I can add to my position, because we are trading with the trend. If we're trading short when the trend is up, those are scalps. Okay, so you've got to keep that in mind. So whenever you see a level being hit like this, you're looking for the most logical choice. So that's a logical choice, and this is the second logical choice. Okay, so that's what you want to do. It doesn't matter that you missed out on this little bit here. That's irrelevant, because at this point you're looking for a long entry to go with. So now let's just use the circles, which will be our entries. Okay, so that was the first entry. We have a second entry here. So now what I'm looking for is the fractional break. So every time a new high gets formed, so there's a high, we break it, and we know that this level is quite serious. Okay, so at this point you have a pretty strong resistance line here. And that is a signal to take profit, okay? You want to take profit. So this trade and this trade, you now take profit. So at this stage, you would have had, let's say we took the there. So one trade would have been 970 points, okay? And the other trade would have been you would have been in here on this Brooks gap. You see the Brooks gap here. That would have been the most logical decision. Although it did come and test the bottom here, it doesn't really matter. That would have been my entry there. And I would have had a 200-point stop loss, and the stop from the bottom trade would be moved up to account for that. So it would have been a zero-sum effect if it had gone wrong. And that takes us up. We have a second trade of just short of 600 points. Okay, now, again, we are at a major resistance level. So you have the option of just taking profit. And for me, late in the afternoon on the Aussie, take profit. There are other instruments out there to trade if you're actually available. That was a nice trade. Take the profit and move on. Okay. The next day, we're at this level again. Now, you can see how we gapped up, but you're still too high to go long. So the higher probability trade is to take the quick short, which will be at that level there. Okay. Put your order in there, and for this you want to keep your stop loss very, very tight. So 150 points, 120 points would be more than adequate for that. Because if it does continue past this level here, then you are going to get more upside. Okay. And again, the target, remember, we're in an uptrend, so your target is short. It's close by, it's a scalp. So look very carefully what is close. So the first thing is you've got this long pin bar. That is the first target. Okay. You've also got this 200 moving average on the daily. Okay. And that coincides with this pin bar here is pretty close. You see this one here. And there's, on that circle there is another pin bar there. So that's a previous high that was broken through, and then this one came back for the retest. So between here and here is quite a strong zone. But you can see how now price action dictates inside bar, okay, engulfing. So there is a trade for a long here. You're above the cloud still. You're on the 200, so you could take it there. And for this one, you're either going to have a very wide stop below the cloud, or you're going to have below the previous low, okay? Or if you really want to just keep it aggressive, just stick to sort of below this pin bar, somewhere around there. And now, again, your target, you can afford to let this run. So we break above here, which we do, and you can see how Kijinson and Tikinson are pointing to the upside. So you can let this run, you let it run until you start seeing this. So you can see there's a pin bar. The next one is a range bar. But have a look what's happening with Tikinson. Okay, that's an indication to get out. Now, this level here was a big 4-hour level that I've put in, which we gapped up and we hit. Let's just come back. So it was that breakout, that previous breakout there, which was basically hit. Okay, so that also coincides on the daily to the underside of the cloud. So there is a breakout, the daily breakout, this bar here. We broke below it. We haven't come back to test it. This was the retest. There we are. So that is a short. And it always will be a short because you are coming from beneath the cloud to the cloud. There will always be profit taking around the cloud area. So not to say it'll happen on the cloud. So you're looking for the next logical place for price to go to. And that would be that pin bar there. Okay. So let's just come back to the hour so we can see what's happening here. Okay, now I'm just going to clear all these drawn objects. Okie dokie. So we've had a pretty big sell-off. Okay. Now, most of the times there is a second move. So there were a couple of clues here. The first one is that Tikinson is pointing down. Okay, you've got the daily pivot up there, and we've also had a crossover. So we've had a crossover here, which is a bearish crossover. Okay, the cloud itself is flat. There's nothing indicating a change there. And we are battling on this trend line here. So let's have a look at price. Price broke through below Dickinson. Okay, so you could have taken a stab, and I say a stab because there's no level here. There's a pivot and there's Kijinson. So when we hit that area there, you could have taken a stab at a short if you weren't still holding short from here. If you are holding short from here, then my stop is there, because I'm anticipating a second move down. So what we have here is a flag forming. Okay, I'll just delete that circle. So you can see how prices come down, and we're trying to go back up again, but Kijinsen's pointing down. So Kijinsen is crossed over and Dickinson's pointing down. So at this stage we are above Dickinson, but very hard to read this time of the afternoon when we are 10 minutes, 13 minutes away from the US Open. So this thing could spike all the way up here, all the way down here until the US gets direction. So right now it's a flag. So there are two ways of playing. If you weren't in up there with a stop above there, then what you're doing is you're waiting for a break of this trend line. Or what you could be doing is go down to the 15-minute, and the rules are still the same. Okay, you can see how price is ranging in between Dickinson and Kijinsen here. So there's Dickinson blue, Kijinsen red, and we're ranging. We've had Span break through the cloud, and it's sitting in price. If this thing breaks below price, then this flag will be validated and continue moving down. So if somebody that was trading on the 15-minute right now, and they would have gone for today, you may have played a long here. You could see the breakout there. Where's the breakout? There. So there's a breakout there. We've broken up. And ask yourself a question: where would price be going to? It'll go and test the cloud. What's close to the cloud? The daily pivot. Okay, and there's something else that's close here, which is here. It's this tail. You can see how price got there, and immediately sellers stepped in and sold it down. And now what's happening is, you can see we are following Dickinson, and Dickinson's rolling over to point to the downside. Two more candles or so, it could cross over Dickinson, and then you're going to have a bearish crossover, extremely bearish crossover, because you've got a red cloud here. You've had a twist, okay? You've had a crossover. It's playing with the 100 moving average. Bearing in mind we're on the 15-minute now, and you've got Span, which is below the cloud. Span drops below here. The next level of support will be this tail, or any one of these tails here, basically, that line up with the 200 EMA. And then you've got some pivot levels to get to, and you've got other tails that you can use as targets on the other side. So your target areas will also be cloud. So this flat cloud here will be a target area. But to keep yourself sane, you want to be trading on the hour as much as possible. Okay, it just eliminates all that noise and gives you a good area to be in. So if you were sitting short at the moment, you wouldn't be worrying about it on the hour right now, because you're expecting the second move, and your second move will be from there to there to there at the moment. If it comes back and touches up here again, then you're looking to get close to the cloud on the hour, which is the last level of support. So there will be support, and here will be support. But with a flat cloud like this, and this kind of price action that's happening here, we break below here, this will start pushing down for its second move. And bearing in mind that the first move was a 1,000-point move. Okay, guys, so that's kind of how I tackle it. Part of my rule is I'm always looking to get in at a level, and that is a level. This here, there's no real indication to get in unless we break here. You can play the breakout, small position, and 300-point stop loss above this high over here. But and then obviously your targets are always take your money at targets. So you can see how yesterday this fall, well, it actually continued to this morning. This is where it built, where the buyer stepped in, right here on this Brooks gap here. So there they stepped in and pushed it up. And I don't even think they managed to push it up to the 50%. They came close to the pivots in the 50% Fibonacci right over there. So I hope that helps, guys. That's kind of how I look at getting in and out of the market. And any questions, just ask. And if you're a new listener, watcher, please subscribe and let's share the love. Thanks for watching. Catch you later.